Hello, everybody. Welcome to another Finimize Live. Sorry, we're a couple of minutes late with markets being the way they are. Who could blame us? Um, Please let us know where you are dialing in from this evening in the chat. A poll is going to pop up in a second. Let us know your thoughts there. Uh, and just as a reminder, Dan and I, who I'll introduce in a moment, will spend about 15 minutes diving into flexible ISAs. And then we're going to open up the chat to all of you to make sure that your most important questions are answered. So please use the Q&A box to lodge your questions, not the chat box, although use the chat box to let us know where you are. And if you see your question being asked, upvote it, because that's how we will make sure the most pressing questions are answered first. So with that being said, I'm delighted to welcome you to our event on your guide to flexible ISAs together with our partners, Saxo Markets UK. If you don't know, I'm Carl Hazley, CEO of Finimize, and delighted to introduce you to Saxo or reintroduce you to Saxo. But if you are not familiar, Saxo is an investment platform that lets you access everything in one place, from stocks and ETFs to funds and bonds, all at a competitive cost. Today's event is all about how to make the most of your UK tax-free allowance using their new flexible stocks and shares ISA. With Saxo, you can invest in over 11,000 instruments, including market-leading stocks and ETFs, all at industry-leading prices. So if you'd like to learn more about Saxo and explore their ISA offering, there will be a link in the chat box. Please have a look, take advantage if you find it suits you. Now, no finance event would be complete without these very important disclaimers. So listen closely as I say, your capital is at risk. This is not financial advice. Tax treatment depends on your individual circumstances and may be subject to change. Now, onto the juicy stuff. I'm delighted to introduce to you Dan Squires, Chief Commercial Officer at Saxo Markets UK. He joined the firm in May 2023, bringing with him over 30 years of experience in equities. He's worked at places like Bank of America, Citi, RBC, and Liquor. We're happy, delighted, lucky, in fact, to have Dan, to have you here to share your insights. How are you doing this evening?
Thanks, Carl. What an intro. Delighted to be here. I think, was it last year you and I did the in-person event, and
Yes.
really enjoyed that. And so, yeah, thanks for organising this, and keen to get into the topic, and obviously, as you've said, take questions from the Finimize community.
Absolutely. If I had planted a stooge in the audience, the question that I would ask is, let's revisit our predictions from December and see how right or wrong we were. But,
well, I'll tell you one thing. I said, if it feels a bit too easy, it probably is. And
yeah,
investing shouldn't be this easy. Things just don't go up 5-10% every week forever. And, look where we are now.
exactly. Okay, so we might get onto markets a little bit later on, but let's just
Yeah.
make sure everyone is on the same page around flexible ISAs. Dan, let's start there. What is a flexible ISA? How is it different from a standard ISA?
Yeah. Okay. So look, I make the assumption everyone broadly knows what an ISA is, and what's quite interesting is they're called different things in different countries, but a lot of countries have these tax wrappers, and so for UK ISA, it's really really simple. It's effectively an ability to shield or to put up to £20,000 every tax year, not calendar year but tax year, into a vehicle which avoids you paying capital gains tax. So when we say tax wrapper, there's no magic dust in an ISA as such. The magic is the fact that if you can work that money to your advantage and you create gains, you've shielded it from tax. So that's the ISA. We've got millions of ISA holders in the UK, but one of the best developments in the last few years has been the emergence of the Flexi ISA. And so, in simple terms, the clue is in the name, right? What's smart about this is that within a tax year, you can put money in and you can take it back out. So imagine, I don't know, a scenario where you've been paid a bonus or something, you've got some source of cash now. We've obviously just started the new tax year. You put the money into your Flexi ISA. some unforeseen circumstance pops up, or maybe you decide to go on a holiday, whatever, you need that cash. You could take it out in June. And then, so the point is, you can put money in and out without losing your allowance. With a normal ISA, once you withdraw that cash from the ISA, you can't put it back in. So the name of the game here is to preserve your ability to grow your money tax-free. And so flexible ISA is just a great way of kind of catering for real life events, whilst allowing you to invest in a very tax sensible manner.
Got you. So the problem we're solving is a lack of flexibility around traditional ISAs.
Yeah, because once you withdraw the money for whatever reason, you can't use it again in that tax year. But that's what's the key difference with a flexible ISA.
And then maybe just to dive in a little bit on the mechanics. So if I withdraw, let's say today I put 20,000 into my flexible ISA, and in June I decide actually I'm going to go to Ibiza, so I withdraw that money. Does the money need to go back in the same tax year, or is it sort of as long as I've opened it within the tax year, I can, next year open a new ISA, or do I sort of double up my allowance, or how should I think about that?
Yeah, no. So there's no doubling up of the allowances. So the 20,000 is what it is, and that's not changed for a while. That's in a given tax year. But it's this ability to take it out and put it back in again within that tax year. You could do another 20,000 the following year. But I think, people are always wrestling with this thing that investing for long term, tucking away money, is clearly a very sensible discipline. It's a great way to build your wealth. But what if I need the cash?
Yeah.
So this is always the big argument. It's a bit nuanced for pensions, because pensions are the ultimate long-term tax-efficient way of investing. But the thing is, you can never get that cash until you reach pensionable age, which puts a lot of people off. ISA, you could always, basically liquidate your ISA and withdraw the cash, but then you basically burned up your tax allowance, so to speak. So for me, this is quite a nice sweet spot that caters for the unpredictability of real life. Allows you maybe to tuck that money or get it working to your benefit, but you've still got the ability to pull it back and spend it if you need to.
Absolutely. Okay, so that's a really good overview of what we're dealing with here in terms of flexible ISAs. If I take a step back, go on.
Well, the other thing I was going to say is one of the weird things about the UK is that far more people have cash ISAs than stocks and shares ISAs.
Yes.
And so I do want to make the point that the flexible ISA is just a kind of like a product thing. Saxo has one. A number of people have one. Not every provider has a flexible ISA. But really, we want this conversation to be on the stocks and shares rather than the cash. And because clearly the stocks and shares is the bit where over time, the compounding effect is most powerful.
Absolutely. Okay. So flexible ISA is an umbrella term, and within that, there's cash, there's stocks and shares. If you're a finamizer in this conversation, hopefully your focus is on the stocks and shares ISA anyway, but good to reiterate that. Let's take a step back and maybe let's think a little bit about the competitive landscape. And what I mean by that is, when I'm choosing an ISA provider, what are the things I should be looking at? How should I be making that decision?
Yeah, so that's a good question, because like I said, the ISA itself is just really a tax wrapper, right? It isn't a thing unto itself. So I think what your community should really be laser focused on is the combination of, let's say, a certain element of safety, security. Does the app work properly? Is this a reliable, place for me to put my money? I would say, particularly at the moment, the key is to look at the product range, the range of things you can invest in within the ISA. And the reason I say that is that, and this was kind of the thing when we were talking in person last year, there was, you could have made an argument all you had to do was invest in the US, and you could make it even more simple and just say 7 stocks or NASDAQ or S&P.
Yeah.
But we've entered a different market environment, and the outperformance at the moment will come from much wider diversification. So that could be geographic, That could be the type of companies you're investing in, growth versus value. It could be that you don't just want to be in equities, you want to be in some other asset classes, bonds. It might be that instead of having 30% of your portfolio in the S&P, you need it spread across a much wider range of ETFs. And maybe you've got much more Europe, or you've got some UK value stocks. So the point is, we're in a market environment where having a diversified portfolio is more important than it's ever been in the last few years. And all you've got to do is look at the year-to-date performance, let's say, of the S&P versus the UK to kind of make that argument real. So I would say that when you're choosing the ISA, you want to be able to invest in a very broad range of stuff. You want to be paying a very low fee, not necessarily no fee, because people are not in this business for charitable purposes. And if there's no headline commission, they're earning a fee somewhere else, trust me.
Yeah.
So it's a bit like, who just generally, it's the same argument really as what broker or platform do you choose? It's a combination of all of those things. An ISA is an ISA. The question for me is, can you max out the power of that vehicle and your money? Can you make your money work as hard as possible by investing smartly and keeping a lid on the costs?
Cool. That's really helpful. I want to pick up on one thing because you've almost anticipated one of my follow-up questions, which is around common mistakes when it comes to ISAs. Now, you've previewed at least one of them, which is sitting in a cash ISA rather than a stocks and shares ISA. The other perhaps could be around opting for zero headline fee, where you're going to get charged on the spreads or something else along the way. What else should we be watching out for? Where do people commonly go wrong when it comes to providers?
Yeah, it's a great question. So I would say that where people commonly go wrong, we see this at Saxo when we talk to clients, we look at people's portfolios, is they're maybe just not diverse enough. So, I don't need to explain that. We've gone from a sort of obsession with the US to, hopefully briefly, a bear market in NASDAQ. So diversification, do you have a wide enough range of stuff? Have you thought about the risks that you're taking with the positions you've got? Far too little attention is paid to currency conversion fees if you're going to be a global investor. Very easy to be sort of attracted by zero commission and kind of gloss over the FX conversion fees, which can be as high as 1%. So if you're going to be an international investor in a UK ISA in pounds, that's going to sting you. We could do an hour webinar on mistakes to make. There'd be some sweet spot between trading too much and not trading enough. Tricky market conditions at the moment. You might not necessarily want to deploy all of your ISA in at one particular time. Maybe you want to people call it dollar cost averaging or average in over time. Some of that would be, I would call it investor behavior. Some of it would be about the platform or the broker that you're using. Focus on what you can control as an individual DIY investor, and avoid getting whipsawed and basically making your investment decisions on the back of headlines. That's a real common mistake is sell at the low and buy at the high kind of thing.
Yeah. Okay, fantastic. Now, for everybody listening to this conversation, please use the Q&A box to drop your questions in. There are a handful already in there. If you see something you want answered, upvote it, because I'm coming to your questions next, and I don't want you to leave here with any stone left unturned, not overturned. 2025 is turning out to be an interesting year for investors. You talked about not getting, whiplashed or whipsawed around by headlines. I still feel concussed from the last few days and just trying to wrap my head around it all. But again, let's not get too much into the headlines, and let's take a step back. What themes, either from a asset class point of view or a sector point of view or trend point of view, what themes are worth, in your view, keeping a close eye on, for better or worse, over the next year or two?
Yeah. So I don't want to make sort of light of the tariff possibility of global recession, trade war, etc., that's driven the market moves that we've all lived through in the last 2 weeks. But all that said, there will be some power themes that are multi-year, themes, and that kind of will just keep going. So defense is an interesting one, which is not the same as tariffs, but you look at all of Trump's stuff about NATO and the requirement for Europe to spend more. You look at what's happened in Germany recently. I mean, consistently one of the top 10 most popular stocks on our platform recently has been the German company Rheinmetall. So I'm not making comment on valuation necessarily on any of these things, but that to me would be something where you might sit there and go, well, look, defense spending in the world is probably going up, not down, consistently over the next 10 years. And maybe there's a place in my portfolio for that. I would be thinking about these kind of human themes. I've been to India recently on a business trip, and there the story is this enormous emerging middle class. Yeah, people going from basically push bikes to motorbikes to tuk-tuks, and now to cars is an easy way to think of it. And what does that, the most populous country in the world, right? India. So what will those increasingly wealthy Indians be buying? This kind of stuff. So there'll always be these big long-term power themes that I think is interesting to think about. But I do think, and we've kind of said this, but I do think one of the key learnings, and the reason I'm doubling down on this is I know this is the case from the Saxo client base is, and I was probably guilty of it as well, is we all became a bit too obsessed with US tech stocks and this idea that the US was it. And it's just simply not true. So it's really interesting that the UK has outperformed the US this year, that if you invest in the UK, you are gaining access to a much more reasonably valued market by any historical standard. I'm talking here about things like PEs and dividend yields. And I'm sure it's not escaped the attention of lots of Finamisers that if your portfolio is stuffed full of stocks yielding 7-8%, well, guess what? They haven't gone down very much in the last few weeks. It's called yield support and quasi sort of bond proxies, if you like. I mean, you can buy bonds, right? But you could also buy bonds in disguise. So the overriding theme has just got to be what worked for the last 2-3 years is clearly not worked at the moment, and that's where I would be spending my brain power. Just that stuff. Have I hedged my bets geographically, style, everything you can think of? You can't say this enough. You do not want less than 10, 15 positions. There's too much idiosyncratic risk there.
Yeah, wise words and definitely food for thought. I'd love to get as many questions as we can answered in the time we have left. So I'm going to dive straight in. Everyone, please use the Q&A box and upvote the questions you'd like answered first. So first one, it's a very good question. How do I know if my existing ISA is flexible or standard?
Well, that's a good question. I mean, it just depends on who's the provider of that ISA. I mean, get on the chat bot on their app and ask them would be my answer. Or, that's, I can only really speak for Saxo. We've converted all our ISAs now to be Flexi ISA because it's quite clearly a superior product for the customer.
Yeah.
So if you're not sure, check on their website or just ask.
Fair enough. Another Flexi ISA logistics question. So what if I transfer 20,000 in year one into a cash ISA and then later transfer the same amount into a share ISA in year two with the same provider? Does that burn up the tax allowance?
Right. Let's just get that question right. If you put 20,000 into cash ISA in year one,
yes,
tax year one, and then another 20,000 into a flex,
and then in year two, you don't do anything else apart from move that 20,000 from a cash ISA into a stocks and shares ISA.
Right. My understanding of that is that they are two separate products, and so what you would be doing, you'd basically convert that cash ISA, or you'd withdraw the cash and reinvest it into a stocks and shares ISA.
Maybe just to help on that, my understanding is that wouldn't use your your tax allowance, so long as you conduct that transfer as a transfer, i.e. that provider has to do some paperwork and request
Exactly.
the money moves across. If you take the money out as a
And
withdrawal
put it back in.
and put it in as a
Yeah,
separate entry, that will use your tax allowance.
exactly.
Another question. Feel free to put your names on these guys. I'm not as familiar with flexible ISAs. Do they tend to have lower interest rates than non-flexible ISAs? I guess this is for cash. Well, not I guess this is.
I don't think so. I mean, the interest rates obviously differ, and some providers, brokers will make that sort of one of their key selling points or not. For me, I think I said this. We looked at, there's some data that shows there's something like 10 times as many people have cash ISAs as stocks and shares ISAs, and it's really interesting because in the UK there's been a sort of slight reluctance. People are a bit scared of investing in equities, or I don't know, view it as just dangerous or something, and they anchor on cash ISAs because obviously you can't lose money in a cash ISA, and that's quite a sensitive subject at the moment, where we're all probably wearing losses in our portfolios because of what's gone on. But the problem is, by definition, even though you're receiving that cash interest tax-free, it's not very much money. And, one of the outputs of this potential global trade war is quite clearly economic uncertainty, and interest rates are like, we've already seen the bond moves in the UK, and, mortgage rates are coming down as a real world example of that. So look, the interest you're going to get is not very high, whether it's gross of tax or net of tax. So for me, it's the thing is, don't obsess with what the interest on cash is. Look at what that money could do for you, thoughtfully invested, globally in a sensible way.
That's a good answer. Thank you very much. Should investors be thinking about derivatives to help hedge against the current volatility? And perhaps more importantly, can these be used in a flexible ISA?
Right. Short answer. It would depend on your level of knowledge and your skill set. Derivative products used in the right way absolutely could help you, hedge. And that's a reason why, the word hedge funds, that might have been, let's say it's not uncommon in the professional world to have kind of crash protection in place. So like long tail options or something, people would have been selling different ways of doing it, but easy to go wrong as a DIY investor unless you know what you're doing. I'm very cautious on things like leverage products, 2x, 3x levered on the upside or the downside. But theoretically, yes, you could hedge yourself, but not really in an ISA, because ISA, just like a SIP, like a pension, the government basically says what is eligible for those products. And leverage products or complex products are not, they're not on the list. So you think of the ISA for equities, for plain vanilla stuff.
Got you. Okay, that's fantastic and good to know. When markets drop, it's tempting to buy the dip and take advantage over purely dollar cost averaging or averaging in. Is this a stupid strategy?
Well, very hard question to answer. Not necessarily stupid at all. All I would say is this. I spent the majority of my career in institutional equities, and I would say that one of the big contrasts that struck me when I moved over to the retail side is a lot less emphasis placed on valuations. So the key to understand is, if let's take Apple, which has had an enormous fall, would it be right to buy the dip in Apple? Quite probably. World-class company, whatever else, on a long-term view. But the question is, how much has the valuation gone down? And is that still expensive, slightly stretched versus history, et cetera, et cetera? Just because something has fallen, if we've come back from a place of irrational overexuberance, it doesn't mean we've suddenly landed in a place of value. So no, it might not be wrong to buy the dip. And if you want to back your own convictions, the thing about markets is it is this constant competition between fear and greed. And if you think you can pick peak fear and everything's oversold, it's not my place to say you shouldn't do that. But I would say it's probably pretty difficult to do it. And, professional investors struggle to get this right. Doesn't mean you can't do it, but it's a long shot.
Fair enough. Dwight in Northampton says, "Hi, flexible ISAs are great, and not everyone does offer it. So does Saxo have a tariff-proof portfolio or fund available in its ISA product? Do you have any thoughts, if not, on how to best optimize? Alternatively, any good reads on your website?"
Yeah, right. Great question. I'll try and answer it really shortly. We are basically a platform, a broker. We are a place for DIY investors. We don't give advice or create portfolios for people. What we do, and it's available on the website and in the app. And if anyone's a Saxo customer, they'll know this. We ping you digitally, possibly several times a day, with thought-provoking pieces and content. Not quite as good as Finimize is, but we're learning.
We have a solution for that.
Yeah, so there's a huge amount of ideas, and I'll give you an example. We sent one to our customers this morning about how to think about navigating the current environment, what you should revisit, where areas to invest in. So there's no model portfolio or Saxo product because we're product agnostic. We think our job is to democratize investing and give investors all the possible tools they could ever want. But we put out a lot of think pieces to say, look, this is interesting. Have a look, see what you think.
Fantastic. Dan, we're coming up on time, so I want to squeeze in one extra question and jump the queue. If you could give everyone here today one golden rule for making the most of their ISA, what would that be?
Well, the first thing to say is that if you have got or access to the 20,000, I would be struggling to see why you would invest it outside of an ISA. So the golden rule, to be honest, is max out your ISA. Like we said, there's nothing particularly special about an ISA. It's about the tax that it will save you. So if you're investing outside of an ISA, you're just going to be paying unnecessary tax that you didn't need to pay. And who wants to do that? So my golden rule would be make sure you've understood the government rules on this. And if you do have that money, or you could come up with it between now and April 26, do the ISA first. That's the golden rule, because avoiding tax is who doesn't want that?
Yeah. And just to be clear, April 26, meaning April 2026,
Sorry,
not the 26th of April this year, because that would be a pretty tight turnaround.
Yes, yeah, no, absolutely. You've got a year. I'm not saying everyone's got 20 grand in their back pocket now, clearly not, but you've got a year to tuck away as much as possible and try and make sure you've used that allowance.
Fantastic. Look, we are coming up on time. Hopefully we've answered most of the big pressing questions. If we haven't gotten to yours and you feel that's unanswered, please drop us a note. We'll share it with Dan and the team, and between Team Finimize and Team Saxo, we'll make sure you get an answer. All that's left is for me to thank you very much, Dan. Always great to hear from you. Fantastic insights, really thoughtful as always.
Thanks, Carl.
And as you leave, please let us know what you think of the event. A little survey will pop up asking what you think. So yeah, Dan, once again, thanks for joining us. Everybody, thanks for tuning in, and looking forward to catching up with everybody soon.
Brilliant. Thanks a lot. Thanks everyone for joining.
Thank you, Dan.